In this video, we're going to look at whether 4 million is enough to retire at 62. So let's imagine you're 62 years old. You've saved 4 million. That sounds like financial freedom, right? But the answer isn't that simple. Yes, 4 million is probably more than enough for most people if you have a plan. Without a plan, even 10 million can feel like not enough. I'm Chris Ball, CEO and founder of Hoxton Wealth. Our firm manages over $3.5 billion for more than 10,000 clients worldwide. During this video, we're going to take a look at John. He's 62, sitting on a 4 million net worth. He wants to stop working and travel, but his biggest question is this enough? So how do we go about starting to figure this out? Overwhelm is probably kicking in. The creep of anxiety that this is going to be super complicated is rising. Do not fear. I'm going to teach you exactly how to understand how much is enough in simple to understand steps. You see, I've seen people with 1 million feel completely secure, while others with 10 million still feel broke. The answer isn't the number, it's the plan. So let's break down what having a 4 million net worth at 62 really means, and what you need to do to give yourself comfort that this is going to be enough. So let's start with step one, understanding where you are starting from. In life, it's very difficult to understand where you're heading or going and whether you're going to get to your destination if you have no clue on where you're starting from. It's the same with creating your plan for retirement. You need to understand where you currently are, which is understanding your current net worth, to help you understand the journey you need to take to move forward. You can easily do this by writing down all of your assets. What do I mean by assets? I mean all of the things that you own that have value. Your bank accounts, your investment accounts, your ISAs, your brokerage accounts, your employee shares, your retirement accounts. You get the picture. The next thing you need to do is to write down all of your liabilities. What do I mean by liabilities? I mean all of the things that you owe. Any credit cards that you don't pay off each month, any mortgages, car payments, etc. We then add up all of the assets and take off the liabilities, and that gives us our net worth as of where we are today. John's is 4 million. To make this super simple for you, I'm going to give you a free to use tool, completely free from me to you. It's a gift. It's called the Hoxton Wealth app, and you can get this by clicking on the link in the description box below. When you click on the link, you'll be prompted to sign up with an email and password. This is to keep your account safe. You'll be storing private information on here about your assets that you will want to go back and edit over time. There is also a desktop version which you can see here on the screen now. Once you've done this and you're into the first page, on the top left corner you will click on Dashboard. Here on the dashboard you will see Add Assets and Liabilities. Now you can see all the options of what you can add. For example, cash accounts, investments, properties. One of the really cool things you can do is actually link your live accounts so they update as your accounts do. Or if you just want to manually update the information yourself, you can add it manually by clicking on the bottom left-hand corner. You can add each different asset class and liability that you have and then just add them in. Once added, you'll be able to see your net worth really easily now in your dashboard. Step one is now complete and your journey can now begin. You are now organized and know what you have and where your current starting position is. If you're struggling with any part, just hit the request callback button and one of our team will give you a call and help you get everything moving. Again, completely free and no cost to you. Step two is to define your lifestyle. Now you need to get real about your spending. If you spend $1 million a year, 4 million is not going to be enough. If you spend 4,000 a year with a 4 million net worth, well, clearly you're going to be all right. Most people look at a number and think it's not enough. They panic and worry that they won't have enough to last, but they don't know what they actually need. You have to define first what you want and need to spend to help you understand how much income you need to take from your retirement savings and investments to cover that spending. This is important as you're not going to have a wage anymore to cover your spending. It will come from your assets that you have saved for retirement. And we do that by looking at two things: your needs and your wants. Your needs are your essential spending, your housing, your utilities, your food, your healthcare premiums. These are things that you cannot live without. Your wants, this is your discretionary spending, the holidays, the business class flights, the new car, the clothing allowance, all the things that you want but don't need to live. The easiest way to do this is to get your credit card and bank statements and go through them line by line and put them into categories. You can then band these into the categories of needs and wants. And voila, you have your needs and your wants as they currently stand. However, I hear you cry, my spending is going to change in retirement. This is where step 3 comes in. Step 3, you need to understand the 3 phases of retirement. Retirement isn't one long single phase. Your spending changes dramatically over time. There are 3 distinct periods when you get to retirement. The first stage is obviously your current lifestyle. This is where you currently are. The second stage is active retirement. So when you initially retire and are fit and healthy and can do the things you enjoy. Typically up to 75. There's not a rule of thumb, but a nice guide. The third phase is later retirement, when life slows down and you can't get around as much. I've given you a free downloadable spreadsheet below to help you visualize how much you plan to spend at the different stages. We actually use this exact spreadsheet with our own clients at Hoxton. It's split as follows. Your current lifestyle, as I said, this is today, and this is the baseline you're starting from. This is essentially your budget as of today. You can fill in all the things you're currently spending on in your life. Active retirement, this is from when you retire to 75. This is when you're still mobile and active. You'll likely spend a lot more on travel, hobbies and experiences. The majority of your needs will stay the same, and you can copy those over from the current lifestyle column. For example, your electricity, gas, water rates and so on is not going to change much. Later retirement, 75 plus, in this phase you will be less mobile and less active. Your needs will likely reduce, and potentially your wants will too. Maybe you'll downsize your house, so your electricity and water would naturally be less. You probably won't be going away as much. I think you get where we're going with this. Also, do not worry about trying to adjust for inflation at the moment. This will come later. You need to plan for each of these phases because they all have different numbers attached to them. It doesn't matter if it's not exact, and I have no doubt it's going to change over time. No one's plan has ever remained the same over the long run. Plans will change. Now we move on to step 4, the 2 horsemen. Once you have your numbers, you have to adjust them for the 2 things that will chip away at your pot. The first is inflation. That $120,000 a year you want to spend today could be $180,000 in 15 years. You have to factor in rising costs over time, which is what inflation means. Inflation typically rises by 2% a year over the longer run. The next thing is taxes. Where you live and how you withdraw your money will determine how much you pay. Don't plan for a net amount, plan for a gross amount and assume a marginal tax rate. If you're going to need $100,000 a year, you can assume a tax rate of around 30%, so you'll need $142,000. On the spreadsheet, I've included a calculator where you can plug in your income needs and it will give you a rough gross number. Do not worry about it being exact or completely right. As we said before, this is just a guide. The goal isn't to perfectly plan. As we said, the plan will change anyway, and you will never be exactly perfect. No one is. It is a guide to help you understand if you're way off or on target, or hopefully have too much and start to plan a legacy with it. Step 5 is putting your numbers to the test. So now you have your numbers, how do we actually know if we have enough or not? This is where the fun starts. Our company has developed a completely free tool for you to use. It's called WealthFlow, and it's in the Hoxton app that you have already downloaded. Just log back in to where you input your assets and liabilities and click WealthFlow on the sidebar. Here, we will start to fill in the details together. Scenario name. Let's start by labeling this Retirement V1. We can add in other scenarios later to compare different income levels or start dates if we want. Input your current age. I've obviously put John's in as 62. Have you retired? John's retired, so select yes or no if you haven't retired. Input your retirement age if you have not selected yes. Next, your life expectancy. You can use average life expectancy rates, but for ease, I've put in 100. I then click next. Next up, you can see that my current savings are pulled through. These are the ones I entered in earlier. I'm not saving anything monthly towards retirement, but I could enter that here if I wanted to. I'm going to assume inflation is 2% like we said earlier. Monthly spending in retirement, I'm going to put that as 0. We will come back to this later. Growth on my savings, I'm going to assume as 3%. Very low, I know, but we can vary that shortly too. Now you can see that my WealthFlow has been built out. But there are a few things that are missing from this. The first thing that I'm going to do is to add my spend events in, the one we calculated earlier. I'm going to select other expenditure and then rename it active retirement and enter in the amount I have from my spreadsheet. I'm going to enter the frequency as yearly, start age is 62 and the end age is 75. Leave the box ticked at the bottom so it increases the spend by 2% per year. See the difference it's made on our graph. It's interactive and will move as your retirement moves. Now the last spend amount to input in is later retirement. Again, hit the spend amount, other expenditure and rename as later retirement. Enter the amount which I have already increased for inflation until I'm 75. Frequency is annually, start age is 75, end age is 100, as that's when I pass away apparently. Leave the box ticked so it increases the spend by 2% per annum and hit save. You can now see the difference this has made. Good news is that under these circumstances, John is going to be okay. Fantastic. One thing we haven't added in is income events. So I want to include John's state pensions or social security, which I will get, which I haven't included in my assets because it's an income. I hit the income event button, select pension income, and I'm going to rename this as state pension. Input the amount I am going to receive. I can check my state pension statement for that. For the sake of filling this in on here, let's say John's is 9,000. Frequency every year, start age 67 until he passes at 100. Leave the box ticked so it increases the spend by 2% per annum and hit save, and this is now added in. I can also add in other incomes I might get from the likes of property and everything else like that too. If you want a more detailed guide on how to do this, or it's throwing you off, then just click the request callback button in the app and someone will come back to you. So now you can see it gives you a clear projection. Right now, based on these numbers, it shows that John is all right until he's 100. Then he's pretty done. But WealthFlow allows you to play around with the variables. What if you only get 2% on your investments? What if you get 5%? Or if you do really well and you get 10% on average? You can see exactly how it affects the outcome. Have a play around by clicking the assets button and changing the return, or clicking on the assumptions button and enter different ages, life expectancy or inflation rates. And that's the real shift. Retirement isn't about the number in the bank. It's about whether that money supports your goals, your health and your family for the decades to come. Your plan will need to be adjusted at least every year for where you are. Even the best plans can change yearly, and the tool is designed to help you understand whether it's going to be tight or that you will have more than enough so you can make the changes now to help you later down the line before it's too late. John with 4 million and a plan has peace of mind. John with 4 million but no plan has anxiety, doubt and risk. It's not the money that gives you freedom. The plan gives you freedom. So if you're sitting there like John, wondering if what you've built is enough, stop guessing. Get clarity, build a plan, retire with confidence. If you want free access to any of the tools we've used in this video, please click on the links in the description box below. Please subscribe for more on retirement planning and living life on your terms. And if you like this video, please give it a like. And if this still feels overwhelming, the first and the easiest thing you can do is to speak to a financial advisor today. I hope you find this useful. I hope you use the tools that we've given you in the video, and I wish you a great day ahead.